political situation in Ukraine remains highly volatile, and growth in China is clearly beginning to flag. Such a scenario would typically have caused risk aversion in the Eurozone's periphery. But recently they've stood firm. Spreads in Italy and Spain are close to their tightest levels for 4 years, and Ireland's performance has been even more impressive. Their CDS spreads are now trading at 86 basis points, which is their tightest level since October 2008. The support that Ireland enjoys was demonstrated by a bond auction last week. This debt sale was 3 times oversubscribed, and the 10-year yield was at a record low. However, the optimism was dented when Ireland's economy shrank by 2.3% in the fourth quarter. This was way below expectations, which were actually for a 1.1% rise. Even though GDP is somewhat of a questionable measure for Ireland because of its small, open nature, it still demonstrated that the economy has a long way to go before it returns to normality. But the market reaction to the poor GDP figures, or lack of it, showed that the peripheral countries, and Ireland in particular, is insulated from potentially damaging economic news. And that's all down to the ECB. The ECB has made a commitment to do whatever it takes to save the euro, and in the background there's the OMT bond buying programme, which is a safety net for the peripheral economies. Emerging markets aren't so lucky, and it remains the most vulnerable asset class to a shift towards negative sentiment. Ukraine is obviously at the centre of attention at the moment, but so far it's failed to trigger contagion, with Russia the only country seeing spreads widening as a result of the conflict in the Ukraine. China's a different matter, and that has the real potential to cause systemic risk. There's been poor economic news recently, and the shadow banking system remains very fragile, and that is probably the main catalyst that could cause a shift in sentiment.